Hello everyone, good morning. Welcome to this video where I share with you my view on EURUSD, my analysis, what I took or what I was thinking about of taking as trades and so on, and how do I approach the chart, and make my conclusion about this particular pair today. All right, I'm just getting on my chart and I saw an opportunity, a missed one, which I would have take if I was on my chart. Yes, if I was on my chart. So what you're gonna do is, with this approach, this higher time frame analysis that I'm going to talk about this morning, we are gonna make use of our line chart a lot. It's simple, it's very simple. You just have to pay attention very well. So I don't know if you ever heard of Malaysian SNR. It's also a concept of support and resistance, but advanced support and resistance levels. We have different type of support and resistance. We have the A and V shape. Talking about A shape, we have every okay, let's start this way. In your chart, every point of price where you see a swing. What do I mean swing? Whether a swing high or a swing low. What is a swing high or swing low is any point where price is returning from. So this is a swing, this is a swing high, 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 even this is a swing high as well. And talking about swing low, we have this is a swing low, this is a swing low, this is a swing low. Is a low created that made price go to the other direction for some times at least. Do you understand that? And every swing here that we will be seeing, every swing that we will see that has every swing let me clean this. Okay, so at every swing, what we'll be expecting to see is, okay, do we have a two candle formation, something like this, and like this? For a bearish scenario, what is likely gonna be gonna give us a bearish movement will be something like this: a bullish candlestick followed by a momentum bearish candlestick. Do you understand that? And this pattern that you are seeing, this candlestick pattern that I just took out in my chart that you are seeing, we can see it, or we can identify it here. This swing, at this swing, do you see the middle candle? Do you see the middle candle? The bullish middle candle, it closes above here, and the bearish candle starts or opens right at the closure of the bullish candle and closes where? Below the bullish candle. That is what we want to see. This is what we want to see. And this particular pattern, price action, if I shift to my it's called an A-shape level. It's a key level. It's a strong resistance level whereby prices will be likely to react from. If I shoot to my a line chart, you can see that we will be likely to be seeing a kind of A shape at that zone, but the daily normally supposed to give us that A shape at that level. You can see we have something that resembles an A. That is why it is called an A shape. And you see this level, if you map exactly you map out exactly that high, that A level. It's gonna give you a strong zone where price is going to react from. And the opposite of this is when we have a bearish candle. This is for a bullish scenario, a bullish reversal scenario. So when you have a bearish candle and a bullish one, this is at a swing low, something for example at this area, this area, or maybe somewhere here also is a V level. You can see clearly. So a V level, you can see clearly a V level, a V level, a V level, a V level. This is a level, this is a level. And from now on, you have to understand that all those A level, all those peak to the upside on the line chart are A levels, and they are created from this pattern, exactly this two candlestick formation is the closure of a bullish candlestick plus the opening of the bearish candlestick that goes below the opening of the bullish candlestick that form an A level. Can you see that? And for the bearish scenario, we have at a swing low, before price pulls up, a bearish candlestick that closes, and then a bullish candlestick momentum, most of the time usually, that opens and break above the bearish candlestick, which gives us what? A V shape. A V shape. That's the same pattern again. A V shape. A same pattern again. These zones, or this concept is used by advanced support and resistance trader called Malaysian support and resistance. So this Malaysian support and resistance, this is just the basis of it. This is just the basis of that Malaysian support and resistance. And we have another type of key level also. Some call them gap, some call them OCL, open close level. So those are area in between candlestick. When 2 or 3 candlesticks are aligned one after one, here we are not talking about swing places. We are talking about area where we have candlesticks that are aligned, that are just moving one after one. Most of the time, momentum candle. You can see such this kind of movement, for example. You can see this kind of movement, for example. We have this closing and opening of these two bullish candlestick is an open close level, OCL, or gap. Some call them gap. So this is an OCL. This also is an OCL. This also is an OCL. Do you get that? They are very important level. This also is an OCL. And at those OCL, we'll be more likely to see price reaction at those zones. We will be likely to see price react to those zones. Price rejecting those zones, just like this one you can see right now here, right here. And sometimes price might not react to them, price might break them, but that is completely fine. I just want you to understand how these levels are, what they are made of, and now we'll head on to how you can use them. So all this blah blah was just to explain to you the basic concept of Malaysian SNR, because I'm going to use this knowledge to explain you right now a setup I missed, and I would have taken It's pained me, but that's it. You can't really do any much about it. So we can see clearly that um we have a we have a bullish storyline that stopped here. A bullish storyline that stopped here because we have another bullish key level that get rejected. This bullish key level rejected price. This bullish key level rejected price. You can see we have a candle closure below the level, and now a new storyline has started on the daily time frame. The daily time frame storyline is currently bearish. That is what we are talking about right now. So since this bearish the current storyline started from yesterday is bearish, what will be our zone to watch, our daily zone or key level to watch? This breakout will be a strong zone to watch, but it has been mitigated already. It is no more fresh. It's an unfresh level because we have this week which is reacting to it. We have normally this let me see, we have a V shape here on this daily. We have a V shape here also, which we have to consider. But it has been mitigated also. It should be kind of considered like unfresh as well, but since it's a daily time frame, they are gonna play at least twice. That is very possible. I see that happen a lot of time. And the next fresh level that we have here is below. We have even 3 fresh level that price might really target to mitigate or to touch before we can see a reaction or even continue going lower, is if the higher time frame, higher than daily time frame storyline is still bearish. So now what I've done is, since everything above here price broke it already, there's two things in mind. There's two things I was having in mind. Is either price straight continue the bearish, or it comes back to this imbalance. Do you understand? Price comes back to this imbalance and continue. Of course, imbalance are zone of liquidity, so we have to pay attention to them in our analysis, especially when you are analyzing the higher time frame. They are strong key levels as well that a trader has to pay attention to and put it in his analysis. So do you remember the V-shaped level that I mapped out, and I said it was already mitigated by a week? This is the week, this is the key level, this is the week on the 4-hour time frame. It doesn't look like anything like that at all. You will be confused. Of course, that is completely understandable, but you have to be focused to understand that this thing that I map out is from the higher time frame, and I'm shifting from the higher time frame, one time frame lower, from the daily to the 4-hour, to identify any kind of breakout. Do you understand that? And what a breakout would look like? A breakout will look like this. To see properly, for the breakout to be seen by you on an easy way, is for you to shift to the lower time frame, to the line chart. And the line chart on the 4-hour isn't giving much, but the only breakout we have is here. we have a breakout here, sure. So we're gonna take advantage of this breakout by entering a position here to continue the trend, the trends continuing the bias, the the dropping of price, especially for Euro USD on this 4-hour time frame. But it might be it might be taking a lot of time as well. So what we are going to do is we might be shifting to the 1-hour time frame, 1-hour time frame. And to do what exactly? Now the 1-hour time frame, what on the 1 hour, and what can we see on the 1-hour time frame? If you know exactly what you are doing, you can even keep shifting from this 1 hour and even go lower. It's kind of a refinement, and which will give you a sharp and quick entry and a huge risk to reward. Do you understand that? So on the 1-hour time frame, we already have a nice breakout. We already have a nice breakout. You see, let me change the color to red, for example, and see if I shift to the line chart. We have a nice breakout on the 1-hour time frame. And if you are used to price action for real, trust me, if you are really used to price action, you can tell me that this is a motherfucker. I'm sorry. Is a damn market, is a damn liquidity sweep, and this is a damn market structure shift that happened here. There's nothing you will tell me. There is nothing you will tell me. And any market structure shift that happened has started on the lower time frame, has started from the 1 minute time frame, from the 3 minutes, from the 5 minutes, which means we have a pre-sale for a long time ago. Do you understand that? We have a pre-sale for a long time ago. So at this point, let's say for example, price was okay, we have this breakout, the candle closed here. If you don't want to stress yourself, you can just place your trade just here, SL here, and you target the next daily key level. So definitely price might be giving us something like this. Do you understand? But which is also gonna be too long, because why I'm saying that? Because I think this breakout that we just this line was from the 4-hour time frame, right? So this 4-hour time frame breakout is here on the road, on the way. So price will be likely to react to this breakout rather and continue the sell. But if that's the case, that is fine. You can still find confirmation on the 1 minute time frame and take your trade. Such like what if you are wondering what exactly I mean by okay, confirmation and blah 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 blah. Let me just clear my chart and I'll explain to you right now. So you have this market structure shift. Let's say I was on my chart, I was following the whole price action from the beginning. I know that this zone from this blue line, let me put it on a dot. Okay, this dotted blue line is a strong key level for me. It's still fresh. Since I know that, I'll be watching the lower time frame, the 3 minutes, 5 minutes, and 1 minute to see whether price will give me a market structure shift there. Exactly. So whether prices will give me a market structure shift there, and additional information to confirm that yes, this could be a strong or a nice sell is that price will give you a good breakout. I love breakout, guys. I won't tell you, I love breakouts. Breakouts makes life so easy. You don't understand. Breakouts make life so easy. You have no idea. So what do I mean by breakouts? We are also going back to our line chart, and you can see here on our line chart what was like at this from this peak was our last V shape that was broken. Our last V shape that was broken was this one. So if you are expecting to be selling, if you were watching this price action before it start dropping, you could have, and if you know about breakout, you could have noticed this. You could have noticed this price action, this break of this. You see this V shape on the 5 minute time frame or got broken, and you see this exact split, exact point where it has gotten broken. It got broke. This is a damn zone for selling for you. And we have this a here also. You might even take it as a kind of QM. If you want, place your sell here, which might be a miss as well. But do you understand the idea? I prefer you put your damn order here. If you are a risk taker, you can even add your SL at this point and extend your sheets, extend it to the next level of next key level of the daily time frame, which you identify on the daily time frame. Because how does price moves? Price moves from a daily time frame level to another daily time frame level. If you are here, that is how scalpers move. If you don't understand price action, you will be sucked, you will be smoked in the market. That's just your truth. And this is the reason why this channel is open, to help a lot out there to understand what it is, especially newbies. So you have to pay attention. Take your book, take your pen, and write things down. Price move from one time frame key level to the same time frame to another key level of the same time frame. It doesn't matter how zigzag it is, but if you understand it, you open your eyes, you get the right knowledge, you will definitely know that this is what has been happening for so long, and I didn't pay attention to it because you don't know. Of course, I didn't know before, but it's the work. I put in the work, I observe, I take notes. That is it. And I learn from others. Don't be ashamed of asking question. If anything doesn't seem clear to you, just drop a comment, send me a message, and I'm sure I'll get back to you and maybe do another video if possible to explain the whole concept. And you can see here we have a nice 11-hour history reward ratio, and we are currently at let me say 80% of no 70% of our target, which is very nice, which is actually very nice. So this is where or how I got this trade idea. The bias was based on the price movement from the higher time frame. Of course, there is no way you can trade and get the bias right if you don't look at the higher time frame. There is no way you can do that. And make sure you understand what a liquidity grab or a sweep of liquidity is. Make sure you understand what a what a breakout means exactly, how to identify breakout, what storyline is. So if you have any other concepts that you want to, because I trade this Malaysian SNR, I mix it with SMC, some couple things in ICT as well. So it depends. Whatsoever you want to learn about, a concept that is confusing you, just drop in the comment section and I'll make another video about it. Peace.